Greetings out there. It's David Duford yet again from Final Expense Agent Mentor at feagentmentor.com. Today, I'm going to do a little video about if I were king for a world, what I would describe as the perfect final expense carrier to use. Now, obviously, if you've watched any of my other videos, you know there is no such thing. Every final expense company that's smart plays to a certain niche, whether that's the carrier that provides the best pricing, or a low price leader, or has very flexible underwriting and somewhat competitive underwriting premiums, or perhaps has good niches along with being a good bread and butter carrier, or maybe is a good carrier based on renewals. Whatever the deal is that the best carriers, just like in any business situation, try to create a niche in which they survive in. And the truth is, most life insurance companies I've dealt with don't want all the business. They don't want all the bad and the good business. They just want that kind of good value business that kind of meets their particular goals. So despite all that, I'm going to still describe to you, if I were to work with one particular company, what I would be looking for as far as a overall perspective on what a great singular final expense carrier would be if that was the only one I'd write. So I would want to have, and again, this is all completely unscripted. Of course, I've always thought about what the perfect carrier would have, and here's kind of what my thoughts would be. First of all, I think in this business, you need to have some kind of price buster product. You need to have some product that's going to be extremely competitive, that can be a great replacement type of insurance product to use to replace existing coverage with. Really for the healthier people. Family Benefit has a product like this. It's their non-med application. They minimum face on it's $10,000, very competitively priced, very similar to Standard Life, if not a little better. Standard Life and Accident. I'm sorry, Standard Life and Casualty. So I would want the carrier to have a very competitively priced, low price leading, maybe Preferred Plus variation of its product that I think would be fine if it paid less commission. Because the way I'd look at it is that, you know, I'm giving up comp to make a sale, and that way I can make it, but now I can make it based off of a lower commission. Personally, I think that's a good add-in or tie-in carrier to have in the situation where the only way you're going to make the sale is based off of a price replacement, which happens frequently. I think a lot of people would like a product that would do that. And I think actuarially speaking, it would be a great opportunity to have something like that tied in, maybe even on the same app, but with a reduction in commission. You can get access to the Preferred Plus pricing. Again, don't know anything technically about how you would structure this, but you get the idea of how I'm sharing it. Whether it was a more tighter underwriting product for a better price, or if it was the same product but with less commission, it would be fantastic. For example, Oxford has a product called Christian Fidelity that pays half its normal commission level. So if you're at 100%, it pays 50%. There's no renewals on it, but the pricing is about 20% less. And you just take that out when you can't price it with Oxford. Now, I wouldn't want to take a half commission on that. I would figure if my current commission is 110, I'd want to get at least an 80 or a 90, maybe a 20 to 30% difference for healthy business for a premium reduction so I could ascertain the business. Just some thoughts. I think that would be something very interesting final expense carrier could do that they really haven't done yet. The second thing I would want is a modified plan that would be generally priced well and but would be a little bit more inclusive. So for example, you have Security National, I think, does this right, although it worries me, to be honest with you, how well they can sustain that model. They allow all sorts of issues to be included to a maximum of 3 separate issues. Any more than that, you have to go to their one of their exotic products. It's not worth going to. You'd write it with Gerber. I like what they do because Security National not only lets it be flexible to write the modified business, but they pay decently too. Most of your 2-year wait products or modified products are going to pay you about 50 to 60% street level. If you can get paid 80 to 100% on a deal and it's relatively competitive, it doesn't have to be super low price. it can be reasonably priced. I think there's some opportunity in having a carrier have that, because you're going to have the ability to write the people who are in bad shape just as much as you would the super healthy people. Again, not most companies don't want that business. They kind of look at it, in my opinion, as a loss leader. They say, look, here, you can have this in addition to you write more business with us in exchange. I'd look at it like that, or something along those lines. Is, we'll give you this as long as you don't put all your junk business with us. It's kind of a complementary product to add in with your healthy business. If you use this as a primary player. Settlers does something like that. I think that's not a bad idea, because it's just risky business. Let's just face it. Now, and I would be open to even having that particular business pay a little bit better first year comp with a decently priced product and give up renewals over, say, a lower first year commission and renewals. That's my thoughts process to kind of get a little give and take to make it work. Secondly, I would want a product that is going to be generally well priced. You would have your competitive price, then you would have your near GI price, and then what you'd have in the middle would be your bread and butter particular product. I think the basics of what you need to have is a carrier that has a 2-year look back on heart issues, 2 to 3 year look back on cancer, that allows for first fill prescriptions. For example, warfarin, Plavix, certain heart meds that indicate that somebody is healthy. Well, not healthy, but they've taken it 2 years without any sort of change in their health issues, that they're still okay to write with. I like that idea, because that way you can get a lot more through versus the guys that completely knock you out if you even take the med. To me, that's just a way to lose a lot of business opportunity. So that way you can, again, write a lot of business as long as they've consistently taken the medication for that period of time. Then I would either do one of two things. I would do a graded plan, a partial coverage plan, where you have a year look back on most issues, particularly cancer and heart problems. Or I would take your preferred plan and then allow for one question to be answered yes, just like Transamerica does. It's the perfect model to model, and that Americo does it too. Let there be one answer yes to the question, and pay a higher price for a first day full coverage product. So if they have lupus, or if they only have they took insulin before 50, or they only have COPD, you got one shot to answer one question yes. If it's two, then it's a modified plan. If it's one, then it's a higher price graded plan, or higher price first day full coverage plan. I think that's the right approach to that, actuarially speaking, and from a sales perspective. It's a lot easier to sell a little bit higher first day full coverage. If you can get the people first day full coverage, then I think selling a graded plan. That stuff is just a little bit of a harder sell, and I would rather have a little bit higher price on a first day full coverage plan for something with one yes question answered versus a graded plan that's a little less expensive. It's just a harder sell, in my opinion. It can be done. It's done every day. But the first day full coverage is where it's at. A lot of the big players do it. Transamerica does it smartly. And so does Americo. They change their app to read to that guideline. I think the graded could come or go. It doesn't really matter to me, where there's some partial first day coverage. But the main things is I want my carrier to be a price buster. I want to have a non-med price range for their whole life, even if it's a minimum of $10,000, and even if I got to take a slight haircut, that's still something that I think is powerful to have. I want a mainline product with your typical competitive lookbacks, the opportunity for a higher price, say, standard rating like Transamerica does, and then, like I said, a near GI product. It doesn't have to be as liberal. It doesn't have to be as cheaply priced as, say, Security National Graded or Gerber, but allows for some flexibility in getting them coverage. The other option that I would want to have, of course, is the ability to pay by direct express, and as earned only is fine. It has to have the Social Security benefit authorization process. Of course, you'd have to do second, third, fourth Wednesdays. Pick the draft date. I'd want it 45 days out to when I have to write the first app. I would probably want a point of sale interview. I think those result in a lot higher take-in ratios and a lot higher or a big reduction in amendment processes. As much as I like to and prefer to write non-point of sale carriers, I know that most agents need a point of sale to begin with, and there's nothing better than knowing you got the deal sold when you leave the home. So beyond that, boy, that's a lot in a nutshell. And again, what I would think niche product would be in that regard is that this is your primary carrier. You're going to do a good job. You're not necessarily going to be low price leader on everything across the board for the preferred plus preferred and the standard and even the modified, but this is truly a carrier you can write your business with and will take all weather type of clientele. We all final expense carriers agents love the idea of working with one company. It would make our lives simple. It's just it never works out that way. There's always some issue with making that happen. So anything else I can think of? Not really. I mean, that's the gist of it. Obviously transparent underwriting. I wouldn't want a combo heart history and diabetic question. But I'd be willing, and I would like the full comp on all ages. I think that's such an important deal that a lot of people, a lot of carriers screw with to screw the agents over on getting paid. But that represents to me a pretty overall perspective on what I think would be an ideal dream final expense carrier. And if you're a final expense or life insurance company out there and you want to consult with me and help you put it together, I know these companies well, and it's amazing how really just a few things one can do to really buy up a lot of business in a thoughtful manner and not give away the farm is definitely something that's possible. You just got to understand the business and how it works to make it work that way. And my name is David Duford at Final Expense Agent Mentor at feagentmentor.com. Check my videos out if you like final expense or thinking about getting started, want to learn more about the process. Also, give me a thumbs up if you like this video. Subscribe to my video page if you want to see more of these every single week. I do 1 to 2 videos weekly. And check my articles out at my website. And thanks so much for listening. As always, Dave Duford, checking out. Take care.